What's up guys, it's Selka. Today I'm making a quick video to help you out find the perfect chart. So when it comes to trading, you're looking to buy at the lowest point and sell at the highest point. But of course, it's easier said than done. So that's why I'm personally using the wave theory, which helped me to buy at the lowest point and sell at the highest point. But for that, we are looking for specific patterns, specific correction, and that's what I will be looking with you guys in this video. So if you like it, feel free to leave a like and a comment and share it with your friends, and we'll see you right after the intro. Alright, so when it comes to trading, I guess you all know that the market moves with impulses up or down, it depends. Then you have a range, which is a correction phase, before having another impulse up. Alright, so the next impulse up, this one, has approximately 90% chance of happening, and as long as the projects keep delivering, as long as the fundamentals are still there, you will most likely have this impulse up. So now that you know that, you should probably be focusing on this part of the structure, and I'll explain you why in a second. But when it comes to wave theory, they call us specialists of correction, because that's literally what we do. We just analyze this phase in order to have the best entry possible for the next leg up. And this protects us from the first type of trader that will be buying on impulses and will get into a correction and won't know what's happening, and will simply be holding the coin on loss and probably selling at the end. So let me just explain this. I will break this out so you guys understand what I mean. So basically, if you're buying on impulses and the correction comes, you'll probably be stuck with your buy. All right, this correction takes a lot more time than the impulse, so you'll be holding your coins for a long time. That's not good. So you're not liquid. You cannot be trading if you're holding a coin. That's first of all. Now the second reason is that you don't know what's happening right there, so you'll get lost at the end. You're probably not going to sell it right there or right there, but you'll end up selling near the low because you will think that this coin won't ever go back up. So you'll take the loss, but it will be too late. You'll have another impulse up, and even this other impulse up can make you FOMO. So you're probably gonna buy back somewhere in there or in there, and you'll just lose all your money. All right, so that's the whole purpose of knowing about the correction, is that you can simply time your entry, buy at the lowest, so around there, and then take your profit at the tops, where it will be kind of obvious you will be taking the trade on a short period of time, and this will be most likely a winning trade. So the whole purpose of the wave theory is to learn what is happening there, so you can get this next impulse up. So this one, we really don't care about it. We won't, like, there's no point of taking this impulse up. It's too sketchy, because you will probably end up on a correction in some time. So that's why we're only focusing on this part. That is our goal, is to get a winning trade off this next impulse, and the first one, we don't really care about it. So the reason why I'm saying all this is because I'll be looking at a chart in a second, and this chart seems to be on a correction. And since in the wave theory we know about the different type of correction and what we feel like it's the best chart, what we feel like this chart is looking good for another impulse up, then we have a judgment. We can now see charts and say, okay, this one has not finished its correction yet, so we'll wait a bit. And you can see this and say, all right, this one is most likely done, so why not buy a little there? If it goes back up, I'll take my profits, and that's it. That's the trade. So I have a few examples right there on Bitcoin, just to let you know what I'm talking about on practice. All right, so right there you have Bitcoin. So imagine you're buying there or there. What's up when you get this correction? You have no clue what's going on. You're probably going to sell right there or right there, but at the end you'll have an impulse and a correction, and that's where you must act. You must act after correction. You must act when it comes to lowest. All right, when you think that the range is done, with the wave theory, of course, or any other trading method, doesn't matter, as long as you know that there is correction phase, there is impulsive phase, there's correction phase and impulsive phase. So All right, someone could have bought something, could have bought some Bitcoin right there and be in profit right there, but whenever you will see this move, for example, he'll probably sell at the end because he has no clue what's going on in this move, and it will go back up, so he'll FOMO again. And like I said, that's how most of the people lose money, because they have no clue of what's happening in a correction. So this is a quick example for people. Let's say people bought right there, then it goes like this. Most of those people who bought right there and have no clue what's going on are probably selling right there and then buying back when it goes back up. But they will be selling again right there, and that's how it goes. All right. So the whole purpose of this video is just to not teach you about correction, just to let you know about the type of correction I'm looking for, the type of pattern that I'm looking for, in order to say, all right, this chart looks good for a buy. This chart looks good to just buy some token and hold it until we reach the target. So I always have some sort of a stop loss in my mind, and always have a take profit in my mind. All right, both are super important, as if you don't have it, I think you can lose it all in a second. So right there, that was an example on Bitcoin, nothing too interesting, but the chart I'll be talking about right now is a project called 0x0. So I'll put it right there. I had to pick up this chart on Dex Screener because it was not available on TradingView. But basically, the project is called 0x0.ai. It's an AI smart contract auditor, and it's a perfect example on what type of chart I'm looking for when it comes to trading. And I'll explain you why. So like I said earlier, you don't want to be aping on the chart that looks like this. All right, if you have a chart that looks like this, there is no point of buying. So an example right there, I have one quick right there. Remember Link. So Link, if I go on the daily chart, all right, so what's your point? What's the point of buying there or there or there if you know that this move could come at any moment, and that you will be stuck with your trades and have no clue what's happening? So you're probably going to sell right there or sell right there because you have no clue of what is happening on this coin. So what is the point of buying right there? There is absolutely no point, in my opinion, unless you're trading a small correction in the smaller time frame. Then there is a point, but if you are not, this has no point. So the whole purpose is to wait for a correction and then to buy back right there, because you know that 90% chance after having a move like this, you'll have another impulse. So that's the whole purpose of the video. Now, when it comes to finding a chart that looks cool, that looks good for a trade, you want to be in the phase that is a range, right? In that range. And even in that range, you need to figure out what type of correction you're in to have the best entry. All right. So first of all, I'm opening this chart, I'm looking at it, and I'm figuring out what's happening, what happened during the impulse. So all I can see from that impulse is that this chart actually respects the wave theory. It gives out correction that we know about. So this move was a regular flat. We know about this correction. You have an impulse, A move, a correction right there, a B move, and then a C wave before having another impulse. Just like I said earlier, it works that way. Even right there, you had an A move, a B move, and a drop for a C wave, and that's a running flat. So you have both type of correction right there in front of your eyes. So you have a regular flat right there and a correction and a running flat right there. Both are correction, and it means another impulse up, a continuation of the trend. All right. So from what I see, this chart usually respects the wave theory. It gives clean correction. Both are super clean. And what I think about all of this is that at some point this was a whole impulse, all right? Because when you zoom in the chart, when you go on the daily chart, you see all this as an impulse, and you need the bigger correction before having another big impulse. All right, so you needed that big correction before having another impulse. So in a long-term trade, in a spot trade, this is a good opportunity because you know that the next impulse will take a lot of time. You're not buying right there and expecting a bigger correction next. You will be buying right there and expecting a bigger correction in a long time, right? a while after breaking this top, you'll probably have another correction. But let's take it piece by piece. In any way, you're trading with a target in your mind. So if you're trading this, your take profit will be there. And of course, you let a little coin right there sleeping in case this goes up, but you took most profits right there. Same thing for this pattern, but it will be exactly the same thing for this one, since I'm looking at this chart as a correction. So let me break down this correction with you all. Again, this coin is called 0x0 for the one that will be looking at it. And this is super interesting to me. It was even more interesting right there. And I didn't see this coin earlier, so I could not buy right there. But this was a perfect opportunity to load up on that coin. And of course, I missed it because I didn't know this about it. But actually, you might have another opportunity to hop in. If it goes like this for a running flat, you'll probably have another dip, another entry before breaking the top. But in both cases, the way I'm looking at this pattern is that, just like I said for the smaller one, you have a first retracement, an A move, you have a move that is slow, looking like this, a B wave, and then you have another move that drops and breaks the low. So you make sure that it broke the low, and it actually did. So when I look at it right there, let me just erase that. So it actually broke that low. It's perfect. All right, and it didn't break the top. So to me, I assume that this is a regular flat. I know about the different type of correction because I know the wave theory. So I assume that this is a regular flat, and I assume that right there, if the project is still delivering, if it's still doing good stuff, the fundamentals are not are good, I mean. So why not hop in right there? Because I know this will be potentially the end of the correction, and I'll potentially be riding the next up move. So right there, it was a perfect entry in my opinion. Even more perfect because there is another thing that some people don't really know about. But when a move seems to slow down and looks like this, so when a move is like crawling down, so it's not going down on an impulse like it was right there with that wick, it's most likely crawling. This means that there is less and less people selling, more and more people coming to buy, and usually this means that you're gonna have another impulse, or at least a bigger correction. So you'll have either an impulse or a bigger correction before a next move up. But in both cases, it doesn't matter. It simply means that you probably need to buy a bit right there. So when I see something crawling like this, let me zoom in. Super interesting. So when you see a move that is crawling, you see right there, going up, down, but doesn't make strong moves. All right, it's simply crawling. This is a perfect opportunity to load up a bit. And like I said, the reason why is because you know about this correction. You know that you're on a 3-wave correction right there, and it's crawling. So this is the perfect time to hop in a trade. So like you see right there, you had a little impulse after, and then you're probably giving a correction of this move for another push up that will probably be breaking the top. So that's my expectation seeing this coin. But the whole purpose of this of me looking at this chart is to explain you about this correction. All right, so you see you have a perfect correction. It's really looking like a regular flat, and you have all different type of correction on top right corner, so you can exactly see what type of correction I'm talking about. And this was perfect to hop in a trade right there. All right, so like I said, I missed it because I didn't know about it. But the more you look at charts at project, the more you'll most likely find charts that looks like this. It's like if you have seen this coin when it was right there, I would have said the same thing. This is most likely a running flat that will break the top because it looks clean as a correction, and this means breaking the top. So the whole purpose of this video is to let you know about how I see my charts, how I find the perfect charts, and how I'm buying them. So what I do, if I see it right there, I'll not buy it. All right, I'll wait for the other drop and then buy right there. So when you know about correction, when you know what you're looking for, when you have this move and you know that the next move is a sell, you won't even buy right there like those people that are buying. you will slowly wait for another drop and then buy lower, because you know that this has a lot of probability to go lower and complete this regular flat. The reason why is just like I said earlier, you have this move which is an impulse down, you have this correction, and 90% chance of having another impulse in the same direction as the first one. So the first one was down, you have a correction, the next one will be down. All right, then you complete the whole 3-wave correction and you have 90% chance of having another move up. So that's exactly how the market moves, that's how the wave theory works, and that's how I select the chart that has the most potential. So when you have a move that is crawling down and then you have your regular flat or your running flat, whatever, your correction, you just increase the probability of having the perfect entry, and that's how you get the perfect entry to ride the next impulse. So that's about it on this video, guys. I don't want to explain further details. I'll keep that for my next video, which should be about the top 10 charts that looks good right now. So I haven't been looking at charts, so I can make the video sooner than I thought. All right, so I'll just make it later this week, or probably the weekend, or maybe next week, so I'll figure out, but I'll come up with 10 different charts that looks good. And until that, I hope you can find some charts by looking at this video and all that I explained right there. And if you find anything interesting, feel free to drop it down below in the comments. See you into the next one. Peace.